Hey everyone, welcome to the Monday Market Minute. It's just me, Austin Koenig this time. No Sean Grapevine, he's out traveling the world, and we'll let him get 1 week off of a illustrious intro from me. So let's just jump right into it real quick. Rob's been doing a great job with the Monday, well, not the Monday, but the daily market minutes, and I think he's kept you guys really up to speed on some of the recent developments last week. We had a lot of stuff going on last week. To kind of just recap real quick. We had the federal deficit, that has been figured out necessarily, but we are not, I guess, completely out of the woods on that because one of the things that we're gonna have to do is fill back, all that money that was spent to keep the lights on at the government through a lot of issuances. So we're gonna see a lot of T-bills. We're actually gonna see some one-day T-bills as well that are going to kind of hit the market essentially. And this is going to be a lot of the debt to digest for the market. So think of it as something that is going to probably put some pressure on rates. What is to be seen essentially from this is, to be determined, and it'll play out over these next couple of weeks. But I would say that we're going to see some fluctuation on the short end of the, treasury debt side of things. Is the 10-year going to be moved around quite a bit from this? We'll see. But and how does that affect MBS pricing? We'll also see that too. But at the end of the day, we're seeing rates go up. I think it's going to be another day of open up the rate stack, and we're going to need to make sure we can find value in the rate stack. Par pricing, selling that is going to be tough when we're having these rate swings on the upward side. It helps the MSRs down in the stack, and obviously Rob's done a great job of kind of reiterating that message. In terms of data this week, we don't have a huge amount. We have some services and factory orders and ISM. These are things that are going to be helping, the whole price and inflation story that's going to come out later today at about 10 a.m. But really, in terms of, I think a data point that I would say is very, very important to look at is initial jobless claims on Thursday. Initial jobless claims, we saw, the unemployment data come out and show unemployment tick up, but the job creation actually beat expectations. So a lot of almost like I don't know, a contradictory message, I guess you could say, with the data. And how the market's interpreting it is the Fed's going to look up and hang up on that jobs number beat more so than the unemployment rate ticking up. Because the unemployment rate generally in a vacuum, 3.7%, is a pretty healthy number for an economy. All things considered, usually 5%, 4 to 5% is somewhere where the Fed is typically pretty happy, and as well as any political party is going to be happy running a presidency or administration during 5% or lower unemployment. However, 3.7% to take up from 3.5. We saw jobless claims kind of tick up over time. We need to see how that's going to continue to progress, and this week we get another iteration of that. The week after, though, is the big week. Everyone's positioning for what is the Fed going to do on their June 14th meeting. So the day before that, I think we get CPI, and that's going to be, a huge thing, as well as the market gets the Fed release and, the press conference of Jerome Powell after that. So a lot of positioning and pricing in whether the Fed's going to hike or not. And last week was kind of a whipsaw of what they're going to do, right? Basically at the end of the week, once we got the jobs numbers, a lot of people I think are a little bit more in favor, or at least pricing in favor of possibly the Fed not pausing. Is that what the market wants it to do? I would say that's something that's up for interpretation. I think at the end of the day, we have two meetings, June, July, where the pause might happen or it might not. We might see another 25 bip rate hike. We might see two. So one of the things that the Fed has continually mentioned, though, is if there is a pause, it does not mean that rate hikes are ultimately over. They may just pause and wait a little bit more to see how their Federal Reserve policy, their monetary policy, has actually impacted the government's, well, not the government, but the U.S. economy's growth, and seeing if inflation's cooled down, the job market's cooled down, and there's definitely some contradictory information. Some things are lagging, some things are a little bit more real time, but at the end of the day, we're seeing jobs numbers that don't really allow the Fed to say, hey, we feel really, really comfortable pausing here or stopping rate hikes altogether. I think there's still things that are a little too hot, And we're going to have to kind of probably see at least one more rate hike in the next two meetings, maybe two. I think at the end of the day, before the jobs numbers got posted last Friday, a majority were thinking people are going to pause for the Fed meeting here on June 14th. I don't think that really is a majority anymore. That's probably half and half, if not a minority. So we're seeing shifts in the market of what's priced in, and that's something to keep an eye out for. Not a huge amount of data this week. We got a lot of debt hitting the market, and so we'll see how the market digests that. At the end of the day, we have a big week next week in terms of data releases and kind of things that are really going to move the market possibly. And the market's just going to try to price that in this week with whatever speeches or anecdotal things that they hear, or how the market absorbs this debt that's going to get issued by the Treasury. It's going to be quite a busy week, really busy month. If I'm not going to lie to you, it's going to be a busy month. So please reach out if you guys have any questions. Rob and I are here for you, and Rob's going to be continually doing the market minutes. You'll see some other new faces here in the coming weeks also, and we're excited to give you guys some market color here every day, and hopefully that's been helpful. So thanks so much for tuning in, and you guys have a great week. Lock some loans. Thanks.